count when you were going by yourself?
It would go up and it float down to about 30 to 50.
Turn this on.
Should you turn it on?
No, did you when I was done?
No.
Just
I didn't
watch
come in
that.
here. I didn't do it here. All right, everyone. We're here to answer all your home loan questions. So make sure you load up that chat box with all your questions, comments, concerns about buying a house. And, load up the questions about, what's going on in the market, what's going on with the Fed, when are interest rates going to come down, all the thoughts that you have, put them in there. Let's see, we have the Lone Gal. Hello, gentlemen, how are ya?
What's up, Lone Gal? Great to see you.
So all your questions, comments, concerns you have about buying a house, make sure you load up that chat box because that's what we do, guys. We help people buy houses and we let them know what it takes for their current scenario. So whatever you're going through, if your goal is to buy your first house, second house, multifamily, investment property, whatever it may be, let us know what it is and we will answer all your questions. Ashley Heikling, how you doing?
What's up, Ashley?
It's almost time to buy, she said. It's almost time. You're almost there, girl. You're almost there. Let's see. The Lone Gal said, it's Debbie, guys. Oh, Deb. Remember Debbie?
What's up, Debbie?
Debbie Deb, what's up?
We miss you.
What's going on? All right, guys. So the market is heating up. It is heating up. What does that mean?
Wasn't Debbie also doing insurance? I thought she was doing insurance.
Maybe she's a jack of all trades.
Maybe.
She's
Lots
a jack
of
all
licenses.
trades, man.
Lots of licenses.
That's a lot of responsibility to renew every year. So the market's heating up. What does that mean? That means that more people are inquiring about buying houses, whether that's filling out applications, us getting more calls, emails, that type of stuff. It is heating up. And people are getting into contract more often nowadays. What that means to us is that we're more busy. What that means to you is that there's still opportunity to get a house without a whole lot of competition, okay? As it heats up hotter and hotter, it's going to be harder and harder to sink a property because the more people that bid on a house, the harder it is because of the different offers that are getting submitted. And I don't know, we might be in one of those situations here not too far from now where it turns into bidding wars. Ooh, that was not fun. That was not fun for us or our buyers because bidding wars make it very hard to sink properties and to get into contract.
We have 80,000 loan officers who left the business, dude. That's a lot. That's a lot. We're going to have to pick up the slack for
Which
them.
means we got to do all the work.
We're going to have to do all the work and get people in houses.
What's going to happen, guys? What's going to happen? So, load up that chat box. We're going to get to your questions here shortly. Load up that chat box with all your questions, comments, concerns about your current scenario. Give us your scenario, guys. I want to know what you're going through, and I want to know what you're working with to see if we can get you into contract. We do this regularly. If you guys are interested in getting a home loan right now, if you're already like, hey, I'm going to buy a house, whether it's my second one, an investment property, whatever it may be, if you're ready to get started in the fabulous world of real estate, go to the link in the bio up top. Click on apply for a home loan now. If you have crappy credit and you need to get that on track and you know you want to buy a house in the future, click on the link that says fix my credit. If you guys want to talk about your scenario because it's super specific and it's not too easy and there's not enough characters here in these chats in order to put your scenario, give us a call. Save our phone number in your phone. It's up top in the link in the bio. It's also right here. And let's talk about it. Where we at, man?
So next month we go looking.
Ashley.
Ashley.
Do you think rates will drop after the election?
I think they'll drop before the election.
What?
I think they'll drop during the election.
Huh?
And I think they'll drop after the election.
Sweet.
It's kind of, in the mortgage business, we kind of know they're going to go down for the next 2 years. They're going to go tick, 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 tick. It's not going to be gangbusters. Never, never gangbusters. I keep telling people, think of a roller coaster. When you finally hit the peak and that first car goes over, are you really screaming speed? Not really. You're just beginning speed. But do you know the rest is coming? You know it's coming. You know you're about to gain some momentum and really start moving forward. So I think all this starts happening September. It's already started, actually, because they've priced in some of the cuts. The only thing that would make it dramatic is if we went from 25 basis points to 50. But I don't think the Fed will do that at this point because I think They'd like to still hold their word of cutting 3 times. In order to do that, September, November, December. That'll cut 3 times in the year.
Dude, why is your voice so hoarse? Did you go to the DNC or something?
Dude, I was screaming at the DNC. I was like, yeah!
Hugo Hader said, I thought she was doing Dallas. Someone's got to. That's a joke.
I don't get it.
Debbie.
Oh, got it. Oh,
Hugo
got
Hader,
it.
what up, fellas?
What up, Whoville Hader?
Someone with the crazy characters. What's the current DSCR loan interest rate for investment properties?
Well, scribbly. It's going to depend on your credit score and how much you put down and the ratio. Because the worst DSCR loan we can have is 1.25%, which means it brings in 125% of the mortgage when you rent it. If the deal's better and you're bringing in 150, you get a better deal. So it's kind of across the board. What would you ballpark?
9. I'll say 9, maybe
I would say
8. Maybe
8 to 10. Between 8 and 10.
So 9 in that range. Ashley Heiklin, it's almost time to buy. Ashley, it is time to buy. It's just almost time for you because you need to get out of that lease. But we'll help you out. No worries. She spit her drink. Who Hader made her spit her drink?
What?
Because of Dallas.
That's some comedic power right
They're
there.
laughing at the Cowboys. That's what they're really doing. They're laughing at the Cowboys.
The Dallas Cowboys?
Is there another one?
Dude, take your hat off. You're Dak Prescott.
I am Dak Prescott.
Yeah.
Shh. Nautica, do I need to improve more before I start shopping? I don't know, Nautica.
I don't know.
How's life treating you?
Are we working? Yeah.
Are you a good person? I don't know.
With that attitude, we have to talk about it because we need to start shopping. Like,
from the looks here, Nautica, I think you're fine.
Yep.
But are you asking about your credit, your income, or your assets?
Yeah.
Give us some more data to work off of. Ryan, where you guys been?
We were up in Dallas, Texas for a while, up in Austin, Texas for a while, and just been.
Mama of 4 boys. Are there any programs for first-time home buyers?
Yes, there are. There's 2 major first-time home buyer programs. They're called Home Ready and Home Possible. Oh, Rajvinder, is Lee sick? A little bit. I got a little bit of a chest infection when I was out in Texas. So thank you for noticing, Rajvinder.
Dude, are you spreading propaganda about Texas?
Propaganda?
Are you?
Propaganda?
Is that what you're doing? So is he sick? No, he's not sick. He
sick.
partied.
I have a lung infection.
He was
It's a little
partying.
different. Yeah, maybe
He's out
it's
there
sick.
screaming and
Not
shouting. What was it?
bug.
A Poison concert?
Yeah, something like that.
John Martinez, pursuit a house now or wait a little bit longer?
I'd say go now.
Go now.
If you can, go now. It's like, when's the best time to buy real estate? 10 years ago. When's the second best time? Right now. Those are real answers because the market dictates everything. I know rates could go down, but when rates go down, prices go up.
Yeah. Tomorrow's not better unless you're exactly in June 2008.
If you're ready, though.
Then
If you're
tomorrow
ready,
might be
yeah.
better.
Yeah. If you're not ready, then it's not the time. But if you're ready and you're able, now.
Yeah, look at your timelines, guys. What were the prices in 2020? What were the prices in 2010? What were the prices in 2000, 1990, 1980? Going back those decades, it's always gone this. Even with the crashes, it's always gone up. So if you're ready, John, go to the link in the bio, select apply for a home loan now, and give us a call. Ashley, how long is the process from the time we find a place and officially starting the process till complete? Clear to close with keys in hand. Lee, how long does that take?
Best case scenario, 21 days.
Boom.
Under certain situations, I can do it in 11.
Boom.
But 21 days normal, 30 days.
Average is about 30 days. So from the time when they say your offer is accepted and they sign the contract, 30 days from then, you should have your keys in your hand, Ashley. That's good news for you. Nautica, credit. My collections were old utility bills from... Yeah, what's
An
it?
X.
Oh, an X person. Okay, 610 score, and it's been slowly improving. You can buy now at Nautica.
Yeah, we could probably qualify you right now.
So, a couple years ago, I would have said if you have a 580 or better, you're already qualified. But that number has pushed to about 600. Okay, if you're 600 or better, I'm going to say you're already qualified because we're putting a lot of people with the 600 credit scores into escrow as we speak.
As we speak.
So you need to call us or you need to ask more questions because I
Call
think
us.
you're ready to go.
Go.
Nautica.
Nautica.
Now, collections. We do need to address collections when we put the file together. So they may not impact you negatively. They could impact your ability, your debt to income ratio. So how much you can purchase maybe can affect that. But how often do you put someone into an escrow and they get a house that has a collection?
Almost all of them have
All
one
of them,
virgin.
all the
Yeah,
time.
yeah. Well, not all of them, but a lot of them.
Yep.
70% have a collection in the last 10 years.
Mm-hmm. So Nautica, let's get it going. Rajvinder said, "LOL." She's laughing at your sickness, man. She's laughing at your sickness.
Damn, I'm sick and she's laughing.
You got it, Ashley. You bet. She said, "Okay, thank you." Rajvinder, starting construction for the addition in 3 weeks.
Great news. Did you get it permitted that fast? How'd you do that? That's amazing.
Yeah, that's a fast process, Rajvinder. You didn't start that long ago, right? What did you start? Probably about a month or two ago. So you're in California like us, Rajvinder, and that it is not a fast, easy process. As a matter of fact, I heard on a podcast this morning that some of the fastest places to get your construction done, where they're just kind of like approved, and pushing stuff through to get it done. You know what state it is, Lee?
Virginia.
Texas.
Texas, really?
Austin specific, one of them.
Really? Okay.
Austin specific, yeah. So if you want to get something built here in California, if you start now, maybe in the next decade or so you can break ground. But in Texas, like you walk in there, they approve you. You can probably bring your hammer and your nails with you and start building. So Rajvinder, what did you go through to get that process so fast? What did you go through? Nautica, how do student loans affect debt to income ratio?
You take it.
Okay. So here's what it is, guys. So your student loans, if it already comes with a payment monthly, if you've already graduated college, you've already reaffirmed the loan and you're making mortgage payments, whatever that payment is, goes against your debt to income ratio. Just like a car payment, just like a credit card payment, just like regular debts that you owe to a bank. If it's been deferred, if you're not making payments yet, if it shows a 0 on your credit report, for most people, we hit them with 0.5%. And that's using FHA. We hit them with 0.5% of whatever that debt is. So the total amount of debt, if it's 10 grand, 0.5% of that is your payment. If it's 100 grand, 0.5% of that is your payment. And that goes to your debt to income ratio, Nautica. But here's the thing. I got asked this question this morning. So we do the videos. If you follow us, anybody who doesn't follow us, please follow us. If you follow us, you'll see we answer questions about loans on a regular basis. Our girl walks in, asks us questions that people are asking here on social media, and we answer the questions. One of the questions was, how does that affect me? Now, the next question is, can I get a house with student loans? And yes, same answer as the collection answer. We put people in houses on a regular basis that have student loans all the time. Student loans are not stopping people from buying houses. What's stopping people from buying houses is bad credit and not making enough money. Those are the two things that are stopping people from buying houses. Not even down payment, because we have down payment assistance programs if your credit's good enough. So that's how it affects you, Nautica. Rajvinder, I still have to upload docs for approval. It's been crazy busy. Where's she at on that, Lee?
That's, oh my God. Once I did the docs, oh my God. Took 6 months so far just to get them approved. So they send it back after about 2 months of reviewing. They say, hey, fix this. Then I send it to the architect. Put it back into the city. 2 months later, fix this.
2 months.
Every single time, it's 8 weeks. Yeah.
That's crazy. Jesus, 760K home, deep down payment, 110. My mortgage is still high. Only got 1,500 for seller credits. That's an expensive house, Jesus.
That's a big boy house, man. That is a big boy house. What, 760? That's 4 G's, right?
That's more than that. It's 110, so you finance 650. Yeah, that's more than that. 1,500 seller credit. Yeah. So where are you at, Jesus? Are you in a state like California, Florida, New York, somewhere where there's a lot of people? Because to get $1,500 seller credit, I won't say it's great, but you got something. Okay, you got something, and we're headed into a market where seller credit's gonna basically go away. Okay, once those rates start dropping down, the buyers are gonna enter in. Yeah. The sellers are gonna have pick of the litter. It's gonna become a seller's market, guys. So getting something better than nothing, Jesus. Mm-hmm. Kim Dab, 650, but 5 years ago, repo, 650, but 5-year repo. What do you think? You get him a house
all day, every day.
Damn, Kim Dab, you ready?
All day, every day.
You've been ready.
Kim Dad?
Kim Dab.
All right.
I don't know, is that Dab?
Kim Dab. Yeah, Dab.
Okay. Nautica, thank you for the love. Esther, thank you for the love. DDL Crew Radio, do you think feds will drop the rates in the next meeting?
Everybody thinks the feds will drop the rates in the next meeting. Some very important Fed people speak this week. And then they're going to give us the preliminary report. I forget the name of it, but it's a preliminary report. And then they go into the silent period. Once they go into the silent period, nobody talks from the Fed for 4 days or 5 days or something like that. But there's 2 Fed members that are supposed to speak this week. Everybody thinks they're going to cut the rates. Everybody.
This week?
Well,
it's Wednesday.
They speak. Not Chairman Powell speaks.
Okay.
One of the other 12 members.
Okay.
Speaks.
So tomorrow or Friday?
Wednesday. Today, actually. Today and Thursday. Wednesday and Thursday. 2 other members from the Fed speak.
That's great news. I love it. All right, here's a long one. Rajvinder, it took 2.5 years. Conditional use permit and changes in occupancy. It was whack.
Yeah, that's where I'm at.
This is at our first location, not the one I just bought. Shit, Lee, help me.
Oh, shit. Yeah.
Shit, Lee, help. Help. Ashley Heikelin. Oh, my God, Lee, okay? I feel terrible for you.
Yeah, appreciate you, Ashley. Yeah, I got a little lung infection. No big deal.
Nautica, my husband and I will contact you soon.
We are here for you, Nautica.
And your husband. Golden Palace Crystal, FHA Streamline rates today.
It's going to depend on your credit score, obviously.
Avi,
that's Javi from that movie. Remember the movie? That was a good movie.
What's that? Javier's is a great restaurant.
Extreme Talent. Yeah.
If you're in Orange County, Javier's is a spot.
But in a perfect world, 5.25. In a perfect world, actually, that's what New American Funding is putting out to the world. 5.25. What? Cold?
It's weather in here, man. It's always changing.
It got hot?
Dude,
it
it's
was
like
freezing earlier.
It's like what's a city in the U.S. where it's either hot or cold depending on the hour?
Austin.
It's like Austin in here.
Yeah, Austin gets hot and cold, man. It's like one day it's like 107, the next day it's like 70.
Yeah. So Streamline, okay, if you have an FHA or a VA loan, guys, any of you out there that have an FHA or a VA loan higher than a 5, let's just say higher than a 5 right now, you need to look into getting a Streamline because, or an Earl, because what you're going to be able to do is whatever your rate is at today, streamline it down to the lowest available rate that's available today, okay? And then you're going to save money on your mortgage payment. Now, you're not doing a full refinance. A Streamline is a slimmed down refinance where it's just literally adjusting the rate to save you money on your mortgage payment. So if this is one of you guys, reach out to us. Go to the link in the bio, select apply for a home loan now, or give us a call. But a full refinance, you're probably not going to do until 2026 or 2027, where we're going to bottom out the rates, hopefully remove some mortgage insurance for those of you that have it, and get you the awesome deal. But between now and then, that's 3 years from now, guys, we can get you some savings, okay?
Savings.
Keep that in mind. Jesus, he's in San Diego County, man. $700,000 in San Diego County? That's a deal.
That's a deal in San Diego.
Hell yeah.
That's a hell of a deal.
Good job, man. Love Keto Bean. Approval when in debt resolution program? How long you been in it?
Here's the rule. We can't issue a pre-approval while you're challenging current credit. So if you're challenging credit lines and you're saying, hey, that didn't really happen, then we can't do it then.
Man, this weather sucks.
Yeah. Humid.
Yeah, it's weird, man. It was extremely cold when we got in here, and now it's humid. It's probably because 2 hot-ass guys are heating up the room. That's what I think, at least. So, yeah, love Keto Bean. How long you been in the program? If you're currently challenging debt, it's going to be a no-go. But if you've been, no, I haven't done anything. But if you're settled it all out and you're just making your payments, yeah, you could be in a good spot. So give us a call or apply for a loan. We'll then adjust it. Jesus, rate was 6.3. That's not bad, Jesus. That's not bad at all. What kind of loan did you get? FHA or conventional? If that's conventional, that's actually pretty good, especially from the timeline that you bought in. Luna E, 599 credit score. Can I get approved for FHA? 8 years with job. Luna E, here's the question, okay? You have a 599, which means you meet the guideline. So the guideline says 580 or better for FHA, okay? So the question is, how long ago did you have those derogatories? Meaning, how long ago did you have those lates? How long ago did you default? How long ago did you have a repo? How long ago did you have a foreclosure? Whatever it may be. If it's been over 12 months, your chances go up a little bit. If it's been over 24 months, your chances go up a lot. So if that 599 is because you have old derogatory on there, maybe get approved, okay? Maybe get approved. But I'll tell you what, if you want to become a homeowner, it's absolutely worth a shot to get pre-approved because it'll let you know exactly where you're at. And if you get approved, you go shopping and get a house. If you don't get approved, we can at least set you on a path to be approved in the near future. So Luna E, I hope that helps.
Luna E.
Golden Palace, man, they got great Chinese food.
Yeah.
Told Rajvinder they have a 680. Okay, cool. 680, man. That'll get you a house all day.
Yep, all day, every day.
What can you get with a 680, Lee?
You can get a single-family residence.
Okay. What else?
Condo.
Okay.
VA loan.
Okay.
Fannie Mae loan.
Okay.
Freddie Mac loan.
All right.
USDA loan.
Sweet.
FHA loan.
Nice.
Mobile home on a permanent foundation.
Yeah, that too. So basically everything?
Everything.
Everything. 680 Golden Palace. You're ready to go. Jay Style, what kind of credit score should we be looking at?
That's more like what kind of credit score you got. It's because 580 starts FHA. If you're a veteran, you can have a 480 and still get a VA loan. There's a lot of catches to that, but you can. So it better to say what kind of score do you have than what kind of score should we be looking at. Because in a perfect world, if you ask me what's the best score, 810. 810. When I see an 810 FICO come in, I'm like, yes.
I know you have a great job. I know you have a lot of money.
yeah. You're gonna get a house. I'm gonna get you a house.
A nice one.
Yeah, I'm gonna get commission.
Hell yeah. Jay Styles, there's your answer. ND500, thank you for the love. Golden Palace back in the house. Can buy Streamline to 5. For how much?
Golden, I need your. It sounds like you're a loan officer. I need your credit score and overall profile, loan to value. How long ago did you get your FHA? There's a lot of factors involved in there.
Can you just do a Streamline?
No, you have to have an FHA loan with a certain seasoning period. And
net tangible?
There's a net tangible value to make sure that the costs make up for it. And you can buy down. You can probably buy down to a 5 as long as your portfolio meets it.
Yeah, I could say you can absolutely buy down to a 5 as long as your credit score and everything else makes sense. So yeah, definitely a possibility. Love Keto Bean. Already have a home but want another in the future and been in the program about a year. So this is the person that had the debt settlement situation. 12 payments on time.
Yeah.
Okay. That's a big deal, Love Keto Bean. You got to make sure you've made those payments on time every time.
And by debt settlement, do you mean Chapter 13 bankruptcy? Or do you mean somebody constituted your debts and then you're just paying the payment off?
I think that's what it is. That's my guess, at least. Cool. Nico Elijah, I emailed you via the form. I'm ready for my next deal.
Let's do it, Nico.
Sweet. So you went to the apply now? Is that what you're talking about?
Text us when you're done. Text either Chris or I. Let us know to go looking for it. When we get off of these, we get a lot of inquiries. We try and address them all, but we don't always get to them.
Yeah, it's hard, guys, but he's right. If you put in an application and you want us to look at it right now, send us a text. Jay Styles has a 620.
620 will get you in almost anything.
Yeah, Jay Styles.
It's not perfect ideal, but it is qualifying for Fannie Mae, Freddie Mac, FHA, USDA, VA, all of the primary programs.
Jay Styles getting a house. Golden Palace again. I have a house already at 6% FHA, waiting for 5% to Streamline. You might be there, Golden Palace. So hit us up.
When did you get that 6%? If it was in the last 3 months, you can't do it. Yeah. So there's a waiting period that you have to wait before you can do a Streamline, and then there's a net tangible test.
What movie is that from? Coming to America. Nepcule, is temporary buy down a good option now?
I don't think it's a great option unless you even then, because you don't qualify at the temporary buy down rate. You qualify at the rate. So let's just say it's 7.5, and they offer you 5.5 for 1 year, then 6.5 for the next year, then 7.5. You qualified at 7.5, and what's guaranteed is for the next 2 years you're going up. While all the world thinks we're going down. So you're going, hey, I'm better than you guys. And then you're like, hey, I'm equal with you guys. And then you're like, this sucks. Well, if it was for qualification purposes, then it might work, but you don't qualify off the 5.5. You qualify off the 7.5. So I'm not a fan of the 2-1 buy down. Not a fan.
So I have one in escrow right now, right now, where their regular rate was 6.5, okay? Not the best credit, but it came in at a 6.5, and they fully qualified with a lot of room in their debt-to-income ratio. But in their world, they're like, that payment's still too high. I do have a lot of cash, so they are doing a buy down. I think they're putting an extra $9,000 into it to buy it down into the fives, but it got them into a payment that they're much more comfortable paying for. So it's a case by case, guys. There's not an absolute, is this a good idea or a bad idea? Many times I recommend not doing it, and that the reason why is because you are going to refinance. As long as you maintain your job and everything's going good in the next 2 to 3 years, you are going to refinance, because the savings in doing a refinance is going to be significant, and you're going to do it, okay? So I recommend it to them. Probably don't want to do that, but they're like, but my payment's not comfortable. So they're doing it. So in that scenario, which is super specific, they are doing a buy down to get their payment down a little bit to be more comfortable.
Now, Nepcule, if you're doing a permanent buy down, which is what he's talking about, then that's different. Permanent buy down for qualification reasons all day. Temporary down, 2-1 buy down, 3-1 buy down, 1-1 buy down. I'm not a fan of them.
Yeah. Nico Elijah, for a commercial property, is 25% down for requirement. Also, do I have to do it in an LLC? We don't do commercial.
We don't do commercial, Nico.
Yeah, sorry,
so
bud.
Can't answer any of that.
But I can turn it on to someone that does. So let us know. Give us a call. We'll hook you up. Golden Palace, 680. I'm 210 days beyond first payment.
The 210-day rule is a VA rule. That's not a FHA rule.
Yeah.
Yeah, it's a VA rule, but it's good. I think you're a loan officer. That's not bad. But the 210-day rule is a VA rule. It's not an FHA rule. FHA rule has something called the net tangible value. 680, good FICO. If you're doing a streamline, I'd like 740, 760, because it's going to cost you $2 to $3 grand to do the streamline. But let's run the numbers. Let's see if it works.
Yeah. Nico Elijah said also, what's the credit score needed for commercial? Like I said, man, we'll hook you up with the person who knows, because we don't do it ourselves.
Nope.
Nepcule, what is today's 30-year conventional mortgage rate?
Nepcule, if you go to our website, you'll see 5.25. Across the board, 5.25 VA, 5.25 FHA, 5.25 15-year Fannie Mae, 5.25 15-year Freddie Mac, 5.625 30-year.
Nice. Love Keto Bean said, yes, exactly.
Okay.
I don't remember what that was too, but you got it, Love Keto
good,
Bean.
yeah.
We're here for you. Nepcule, can we use seller credit from home closing to pay auto loan? Depends on the type of loan.
No, because if it's closing, that means you're departing residence.
Oh, cool.
You see what I'm seeing?
Can we use
Yeah.
seller credit from home closing? I think they just mean from the home that they're going to close on.
If they mean that, then no. Wait a minute. It's semantics. Technically, no. So you have to use your own money, and then that has to go towards closing costs. So it's a little strange. Is that right?
I want to say you can with VA.
Yeah, I think you might be able to.
I want to say you
yeah,
can
you might
with
be
VA.
able to.
So that's why I say it depends on the type of loan you have.
No, because if the loan falls apart, then that doesn't work. I'm trying to think of the guidelines here. Can we use seller credit from home closing to pay an auto loan? I'm going to have to go a blanket no.
And I'm going to say, ask us tomorrow, because we're going to get you an exact answer. Yeah. An exact answer, because I think you can. He's going to say no. I'm going to say I think you can. It's still not a for sure thing.
I think it's akin to a kickback if you do it the wrong way.
Yeah.
Because it has to be your money.
Well, here's the problem that happens, is that everything gets put into a pile, and then everything gets dispersed. So are you using seller credit? Probably not.
Yeah.
Are you using seller credit? Maybe.
Semantics.
Because, it's semantics. You're using your funds. You're using seller credit to do everything. So get back to us tomorrow. I'll give you an exact. I will give you an exact, Nepcule. Nico Elijah, we most certainly text. Thank you so much. All right, man. We're going to keep an eye out for that, and we'll give you a buzz as soon as we're done here. Okay. Kuru. What are rates currently like? We just said Kuru.
Kuru, 5.25 on VA, 30-year fixed. 5.25 FHA, 30-year fixed. 15-year Fannie Mae, 5.25. 30-year Fannie Mae, 5.625. That is not your offer, by the way, Kuru. That is what New American Funding is putting out to the world. Mm-hmm. The only way we can give you an offer is to pull your credit, build your file, and find out what your scores are.
Yeah. DDL Crew Radio. Is the Fed drop going to be 100 points? Do you think?
That's cute.
I wish.
Yeah, it's not gonna happen. No.
And I
DL,
actually don't wish.
Yeah. DL Crew, no. Here's the Fed is very conservative. Very conservative. And they can always cut more. So they meet 10 times a year. I think it's 10 times a year. And because they meet 10 times a year, they can cut right now and go, hey, you know what? We're just waiting another 4 weeks. We can cut more. And we can cut more. They can keep cutting. So I don't think they do anything dramatic like that.
Yeah. Tori, hey, I just got fired today. I don't know what to do. Tori, that sucks. That sucks a lot. But here's what I'm going to tell you not to do. Don't sit on your ass.
Yeah, go find a job within 6 months, and it will act like nothing happened insofar as the loan process happened.
Yep. Start putting in those applications. Call your friends, your family. Let them know what's going on, and get that plug. Get that connection to that next spot you're going to be at. Everything will be okay. Tori, there you go. Love Me Glory Gallery. Love Me Gallery probably says boutique. Mm-hmm. Where do you think the rates will stand?
What did you get
March?
fired from, Tori? What was your job? Let us know.
Where do you think the rates will stand come March? Ooh, come March. What do you think, Lee? As soon as he stops coughing, he's going to let us know.
Right now, the Fed funds rate is 5.25 and 5.5. Fed funds rate will be somewhere in the neighborhood of 4.5, I guess. 4.5 means that interest rates will be across the board 5.75 to 6, somewhere in that range.
It's going to come down slow, guys. Don't expect a big drop. Do not expect a big drop. Golden Palace. Nope, not a loan officer. Just watch y'all. Learn and ask.
Appreciate you, Golden Palace. We appreciate you very much.
Yeah, actually, the one that helps us, our marketing girl that helps us with our videos is like, I know so much about loans now. I already know what the answer is going to be.
Right.
Yeah, it's pretty straightforward, guys. It's not hard science. Now, to remember all the guidelines, and there's so many of them, can be very difficult. It takes many years. But if you just watch our videos over and over and over again, you'll have all the answers too. Sean and Kilsey, how many years do you have to get an FHA?
So 2-year work experience, but there's some catches. So if you went to nursing school or engineering school and you finished, you got a degree, and you went to work 1 week, as long as I can prove you were schooling for what you went into. So 2-year history, but that 2-year history can be education, can be military, can be a lot of things. And in the event that you used to work, then you took some time off, let's say you had a kid, and then you went back to work. Well, if you used FMLA, then non-event, it's like you never took any time off. But if you took in excess of FMLA, then I need 6 months back. Good to go.
Yeah, DDL Crew. You need a shot of tequila for that cough.
I agree with you. Bring me one, DDL Crew. Let's do it. Let's do it. What kind of tequila do you?
That's what I was just gonna say.
What kind would you bring me?
What would you recommend, DDL Crew? What would you recommend?
Still Patron? You still Patron?
If it's Patron Grand, that's $50 a shot. I'm a 1942 kind of guy though.
I do like.
Ashley Heikelin, let me get that 5.25.
Yep.
Let me get that 5.25. Take a look at that FICO. Yeah, Ashley Heikelin, very possible. Actually, it's very possible. The one I just spoke about that did the buy down, they went from 6.5 to 5. They're locked in at a 5. Yeah. 5. So put a little bit of money into it, you might be able to get there. San Diego Oscar, never seen it or sent it. Sent it. I don't know what that means, San Diego Oscar, but give us some more data. Nepcule said, okay, thanks. And San Diego Oscar said, what a point.
With a point.
Okay, good. Oh, yeah, of course. Nepcule, what is your rate without buying any points? I don't want to buy points to cut interest down.
What is your FICO score?
How much will the rate be after the Fed meeting?
Well, 2 things. 1, the only way any loan officer can quote you is to actually pull your credit, calculate your income, build your file. Then they can quote you. But the banks put out their rates. So New Market Funding's putting out 5.25. That's what they're putting out. Is it for everybody? No. You know, if you think that, you don't live in the real world. It's like that car on the automobile commercials. They're not all that price. They have one that price. This 5.25 is a perfect file. If you have an 840 FICO, putting 25% down, and your DTI is 25, you're going to get this kind of rate. But you know that. If you're in that category, you know you're in that category.
Yeah.
So, how much will the rate be after the Fed meeting? The mortgage rates are dictated by the market. So nobody knows what the market's going to do. But we do know what the Fed rates are going to be. So if it's 5.25 and 5.5 and the Fed cuts the rates 25 basis points, we do some quick math, 5 and 5.25. I can guarantee that if they cut 25 basis points off 5.5, it will be 5.25. There are very few things I guarantee, but I guarantee if they cut from 5.5 Fed funds rate to 5.25, dilly sauce. Dude, dilly sauce is in the house.
Whoop whoop.
What's up, dilly sauce?
Where do you see that at?
Right at the bottom.
Oh, yeah, okay. What's up, dilly sauce? How you doing, man? So, the stock market got demolished yesterday. Yesterday. And we walked into better prices than today. So when he says that the rates are dictated by the market, that's exactly what we're talking about. So we walked in today, all green. Green means better. Red means worse. Okay? We walked into all green. So when the stock market gets demolished, we usually walk into better interest rates for mortgages. But they're not drastic, guys. It doesn't go from a 6.5 to a 5.5. It'll go from like 6.5 to 6.375. It'll go, maybe there's a quarter in there, but a quarter is huge. Mm-hmm. It's huge for a natural market move. And the Fed's talking about reducing the Fed fund rate by a quarter. Maybe 3 this year?
Yep.
Maybe 3 this year?
Mm-hmm. It's going to be a good, if you're in the loan business next year, you're going to make a fortune. There's a lot of money to be made.
Yeah.
Why do lenders always try and sell points?
Who does?
So, NEPCUL, you are accidentally caught in a very awkward spot. If you go to a direct lender like us, I don't care what your rate is. I don't care. I'm not going to try and sell you discount points. I don't care. It doesn't matter. My commission doesn't change at all. Zero, none. But if you're with the broker makes more money depending on how much they can sell you. And it's not so direct because the broker could actually, let's just say, take a number at 6.5%. They have many broker lines, most brokers, and they could shift who they send the loan to and get you that 6.5% for free. But they don't make any money. But if they shift it over here and they talk you into buying down the 6.5%, they make a much bigger commission. And it's not so straightforward. It's very difficult to understand what I just said. But if somebody's trying to sell you into buying the discount rate, they're making money on it. Because I don't care what you take. I will give you the rates. I will give you all the brokers. I'll let you see the pricing. And you'll ask me, which one do you think I should take? And I'll run some numbers for you. Take me half hour to put it all together. And then I'll tell you what I would do if I were in your shoes. And then I don't care what you choose. Because my commission's the same no matter what. I'm a direct lender. It's different.
Yeah. So lenders across the board don't do that, but I can see where brokers have a beneficial interest to do that. So maybe you should get a pre-call from a direct lender. Leon Smiley Richards. So I got a 640 with 40K down and 20K in credit card debt. I make $75,000. I'm looking at a 4 multi-unit family property. Multi-fam. Is that a 4-unit? Or is that something with multiple
Yeah, Leon, you can probably do that.
dwellings?
Because in the VA guidelines, FHA, Fannie Mae, and Freddie Mac, and USDA, I can buy a 4-unit. I can use 3 units, the income, in order to income qualify. And you didn't give me the purchase price, but if you're making $75,000 in most parts of the country, you won't be able to afford a 4-unit with just the $75,000. But if you use 3 of the units in order to derive income, and you live in the primary one, then I can make that work in most areas.
I think you're going to have a challenge with cash, though.
Yeah.
You're gonna get hit hard with reserves. So anytime you go 3 or more units, guys, FHA, you're going to get hit with reserves for the property. So whatever that total mortgage payment is, they want at least 6 months of that. So, okay, across the country for a 4-unit, what do you think is a good price, a cheap price?
450.
450 grand?
Yeah.
Okay.
Across the country, not in California or New York or Los Angeles.
Let's say they're putting minimum down. Okay, let's say put a minimum down.
3.5%. So that's 15 grand.
So that mortgage payment's probably going to be in the neighborhood of 3,600, 3,300
yeah. Times 6, so
6?
20 grand.
20 grand. So 40 grand total. 20 grand, 15 grand plus 15 grand.
Yeah.
You're going to
If you
need
get
another
some
10 grand.
costs, if you get closing costs, you could do it.
Yeah, if you get closing costs, you can do it. If not, you need to save
Yeah.
another 10 grand.
Yep.
So there you go, Leon. Golden Palace Crystal. So with my 680, 40% DTI, I should expect higher than 5.25?
Yes. Yeah. Unless you're buying it down, 5.25 is it's that teaser rate that banks put out. If you were asking me just my quote to you, I would never touch 5.25. But I'm telling you what New American Funding puts out.
Yep.
And they justify it on the website. They do.
Yep.
Dilly Sauce says, yo, when should I refinance? When the numbers make sense, Dilly Sauce. When the numbers make sense. We have to take your interest rate. We have to figure out if you refinance, how much will your new payment be? And does it make sense? And if you're in a VA loan, wink, wink, there's something called the net tangible value test, which means the VA makes sure that we don't take advantage of you. That's the best way to put it. It's called churning. Loan officers can make a lot of money by refinancing. But the VA puts a fail-safe in there so they can't.
Yeah. Nepcule. I like this question, Nepcule. I like this question. I have lots of seller credit remaining after using for closing costs. What should I do? Okay, here's the plug, guys. This is going to be the answer that you all need to pay attention to, because that's money that will go back to the seller if you don't use it. So what you're going to do is you're going to tell your loan officer, apply that to principal. Apply it to principal. You are going to take that extra money and apply it to principal, which means you now have a smaller loan. You're going to do what they call a principal reduction. A principal reduction. Do not let that money slip through your fingers. When I first started out in this business and there was extra money, the people on the back end like to do whatever easy on them, and they want to do whatever they can so they don't have extra work. Okay? Don't let that happen. Do not let that happen. A good loan officer will say, that is our money and we are going to use it, and we're going to use it towards principal reduction. Okay? So I hope that helps. Do not let that money slip through your fingers, Nepcool, because you're going to want to use it. Max Martinez, do you think origination fee of $8,500 is okay for a $323,000 FHA? I think it's high.
That's ridiculously high.
There's points in there.
That's ridiculously high.
A lot of points in there.
Yeah, I think that's ridiculously high. So your origination is partially, if you're using a broker, partially what he puts in his pocket. That's the reality. So in addition to his commission, that's, by the way, that's in addition to commission. And you have to disclose it on your CD and your LE. So when they say, hey, well, that's what it costs to do a loan. Our origination as a direct lender is $1,495. That's what it is, $1,495. I don't care what loan it is, $1,495. That's what it is. So I'm not a broker. I cannot just go, hey, you know what? I think I'd like to make, in addition to my commission, an extra $7,000. I can't do that, but brokers can. So that's pretty high.
Yeah, Dilly Sauce said, how would a T-Money versus Kamala administration affect the housing market?
That's a very good question. It's very complicated. So
and we call him T-Money because we can't say his name.
Yeah, we get slapped. So it will not affect the housing market immediately directly. It's like, how much will working out today at the gym, giving everything I got, affect my health? It's not a direct one-for-one, but the accumulation of policy will sooner or later affect the market. And what are you doing?
Looking at our viewership.
Oh. Yep. So it will sooner or later affect the market. And with the Kamala policies, she wants to give $25,000 for home people, but that comes from somewhere. And the way that gets there is through extra taxation, and unfortunately through a lot layers that most people will never understand. It's very complicated. But it will eventually catch up to them. It's like spending money on a credit card. When you spend money on the credit card, you're like, hey, that didn't hurt. That didn't hurt. That didn't hurt. That didn't hurt. Before you know it, oh my God, that hurts. So, I believe T-Money is way more fiscally responsible because he's run businesses. That's the way his brain works. His brain sees balance sheets. Kamala never ran businesses. And because she never ran businesses, she doesn't see balance sheets. She just sees, let's fix that, let's fix that, let's help all the homeless, let's give illegals $25,000. It's insane. So I don't think it will have a immediate effect, but in about 3 or 4 years, right at the end of the administration, it will hurt the housing market if Kamala's in, and it will help the housing market if Trump's in. That's how I think.
Yeah, Neptune, can they do principal reduction? So you're talking about your loan officer, your bank? Yeah, absolutely possible. Mm-hmm. Absolutely possible. Another thing, if you don't want to do that, because you can be looking at your mortgage payment, I always want to take the principal down. I always want to take the amount of money that I borrowed down. But if that's not something it's not good for you, because you could apply it to the rate. You could do a bigger buy down and affect the rate, which will drop your mortgage payment more than if you were to do a principal reduction. But I always like reducing how much I owe. So that's totally up to you. Dilly Sauce, won't the sellers just up the price $25K?
Dilly Sauce coming with a great question.
Man, this guy has all of them.
You got some smarts there, boy.
It's like he's been holding these back for the past couple months.
Boy, nicely, in case anybody else is doing that. Yeah, there's reasons. Anyway, Dilly Sauce. Not so straightforward that they would just increase the price $25,000 because it gets absorbed into the market. And what I mean by that is that $25,000 borrower isn't the only borrower in the market. The borrowers in the market all come to compete for this house. But the market price of the house is $500,000. The fact that this guy's getting $25,000 doesn't change the market price. It's still $500,000. But if enough people get $25,000, then the market price will start to adjust a little bit. But because they're not the only buyers in the market, it's not a one-for-one effect. And the people that would get the $25,000 are probably, best guess, 8% of the market. So if that number is correct, then your $500,000 house would go up 8%. So roughly, I don't know, $8,000?
There you go. Yo, Saeed, what do you look at on the bank statement? How many times you go to Chick-fil-A per month? Where you go to eat at 2 a.m.? How many Del Taco runs you have? No, I'm just kidding. We don't look at that stuff.
So we don't look at, I don't care.
We don't look at anything.
Yeah. We send it to the underwriters, and the underwriters go, hey, why'd you take $3,000 out in cash? Hey, where did this $2,700 come from? Hey, what's this other account that you keep sending money to? That's what they look for.
Large deposits.
Yeah, they're always looking for large deposits and other accounts that you're not showing them.
Yeah.
And they're good at it, by the way.
So people will have separate accounts. Like, I'm just going to send all my money over here, or I'm going to send all my money over there. And they're not going to be able to find it. They'll find it. Their statements show everything, guys. It shows everything.
And then the next thing that borrower says is, do they have the right to ask me for all my accounts? I'm like, you're asking the bank to borrow $500,000. They have the right to ask you. You have the right not to give them. They won't give you the loan. It's just business.
Yeah. It's America. You do what you want. Love Me Galore Boutique. How many months do they go back on bank statements?
Usually 2, but if there's reason, 4, 5, 6, but usually 2.
Yeah, and where do you guys go to eat at 2 a.m.? I want to know.
I like eating at 2 a.m.
That means you had a good night.
That means I need that tequila.
Creation Clause 8. It keeps freezing.
Okay. Wish
Call Verizon. Tell them you need more bips.
Let's play some fun with this. We'll go like, hey, okay, yeah, Hope that helped you.
Oh, I'm still frozen. Sorry.
Yeah, you're frozen?
Yeah.
All right, cool.
All right, dude, you ready to hit it?
You know what? We appreciate you. Dilly Sauce, if you're still on there, really great to see you there. Great questions.
Welcome back, my man.
We will be in touch, and we've been Chris and Lee. We are out.